Johnson & Johnson has been making the news and bringing out new headlines that they are working towards creating a vaccine sooner than expected. So last week they actually reached a deal with the United States for 100 million doses of their vaccine, which is valued at over $1 billion. So today we're going to break down Johnson & Johnson, do a full analysis of the company, and determine if now is to jump in and buy this healthcare dividend king. Of course, we all know Johnson & Johnson. J&J is one of the most solid companies on the US stock market. They've been providing investors with strong, consistent dividend growth for the last 50 years, and they will continue to do that long into the future. So this is one of the companies working towards a vaccine to help solve the pandemic. And as of the last couple of days, they've been in the news a lot lately because they have reached new agreements with the United States and are making good progress towards coming out with that vaccine. So today we're going to do an analysis on Johnson & Johnson, determine if now is the right time to buy this company, and take a look at how we expect them to perform over the next couple of years. So thank you for tuning in, everyone. As you know, I'm the Gen Z investor, and every single day on this channel, we talk about different stocks you can buy, overall stock market performance, and any other big stock market news and headlines. So please like and subscribe, and we're going to jump right into J&J. First, we're going to talk about their big news headlines, break down the company fundamentals, and go over the financial statements and some price targets for what we expect the price to be for the shares in the next coming months. So Johnson & Johnson announced this week that they reached a deal with the United States for 100 million doses of their vaccine, which is valued at over $1 billion. Another key aspect of that deal is that they have the option in the United States to order an additional 200 million doses later in the year. So of course, it's great to see that Johnson & Johnson is one of these large companies working towards coming up with a vaccine. I hope a bunch of companies can come up with a vaccine in order to help save people's lives. But if Johnson & Johnson is the first or one of the few that actually will come out with a solid vaccine, I'm sure they will see nice revenue and share price appreciation when that comes out. So they are working hard towards getting that vaccine out to the public. And this deal is actually valued at over $1 billion, which is great to see. And of course, this is amazing because this deal and these doses will be provided to Americans at no cost. There might be a slight cost like to actually be administered the vaccine, but overall to purchase and use the vaccine in you, it will not be at any cost if it's used for vaccination, which is great to see from Johnson & Johnson. And this is a positive news standpoint because this company is making this huge progress, and I really hope they can continue to grow and continue to work, and hopefully they can see future orders of their vaccine if it is like working and all past all the clinical trials. The next big headline that they made this week was that they are actually ahead of schedule and think that they're going to start their late stage clinical trials in September. So at first, with regard to vaccine, we were not expecting one until early 2021, even mid to late 2021. So the fact that Johnson & Johnson hopes to begin their late stage trials ahead of schedule in September is great to see. So right now they're actually starting their early stage human trials with about 1,000 people, which is incredible, meaning they're actually having this vaccine being put into human participants in order to track, progress, side effects, and hopefully we can tell if this vaccine is working, and hopefully there's nice future potential and we can start saving people's lives. So we're going to jump into Johnson & Johnson, do a full analysis on the company, and take a look of if it's a good stock you want to hold in your portfolio. So we jump over to the share price. You can see here, they're traded under ticker symbol JNJ, currently around $147 a share. Nice 1-year share price appreciation at 14%. So they saw March lows, but they have not really recovered past that pre-pandemic level. So pre-pandemic level around $151 a share. You can see here right at 147, 148 right now. They've recovered, but they are not, surpassed that level. They're trading at the pre-pandemic level right now. 52-week range, trading towards the high side, but not directly at that 52-week high. And a market cap at around $390 billion. So this is an insanely large company and one of the largest companies on the S&P. Moving over, we're just going to jump right to the dividend and get that over with right away, because as dividend growth investors, we like companies who consistently grow their dividend each and every year. So Johnson & Johnson's yield right now is at a 2.7%, so a very nice starting yield. Very low sustainable payout ratio at 51%. Very unlikely that this company has any issues paying out that dividend anytime soon. And they do a very nice job of growing that dividend at over 6% per year over the past 5 years. So overall, you're getting a nice 2.7% starting yield, tailored with a nice over 6% 5-year dividend growth rate to get a nice overall dividend return. And they have an insane dividend growth streak at over 57 years. They are a dividend king and one of the few companies that have reached that 50+ year of consecutive dividend increases. So this company has a huge dividend track record, very sustainable payout ratio right now, and I do believe they will continue to pay out that dividend into the future. with regard to how safe that dividend is, they actually have the highest possible dividend safety rating at 99, which just kind of backs the idea that this dividend will probably never get cut anytime soon, and Johnson & Johnson is in a strong financial position to continue to grow that dividend moving forward. Now we're going to take a look at how Johnson & Johnson has performed over the past 5 years. Take a look on the 1-year chart, they're up 12.7%. Moving on to the 5-year chart, because of course we have to take a little bit of a long-term perspective. This past 12 months has been somewhat interesting. We all know we went through an economic slowdown, and we're continuing to go through that economic slowdown right now. 5-year return without dividends is at 50%, and the overall market performed at 57%. If we include dividend returns, you can see here Johnson & Johnson brought in close to a 73% total return over the past 5 years. Meanwhile, the overall market brought in 76%. So over 5 years, Johnson & Johnson slightly underperformed the overall market, but not by much. Moving on to what other analysts and a bunch of different analysts we're going to take a look at how they're expecting Johnson & Johnson to perform into the future. Of course, it's great to see that they had decent 5-year performance in the past, but what are the analysts expecting from this company into the future? Because we're buying now, we want our share prices to grow over the next 5, 10 plus years. So if we take a look, one thing we want to take a look at is how the company is currently valued. Johnson & Johnson right now from Morningstar is currently at a fair value. That's very important because Warren Buffett's favorite saying is he'd much rather buy an excellent company at a fair price than a fair company at an excellent price. So Johnson & Johnson is of course an excellent company, one of the top tier companies in the world right now, and to get them at a fair value right now, I believe is great. Of course, we would really like to see Johnson & Johnson undervalued because everyone likes buying a stock when it's undervalued, but getting a strong, solid company like Johnson & Johnson who's going to post consistent dividend and dividend growth each and every year, it's nice to jump in at a fair value. Taking a look at what analysts are expecting is that with regard to price, over the next 12 months, the average analyst in this estimate shows the mean price target to be around $166 per share. So overall, the average annual price expectation 12 months from now shows the share price to be around $166, so nice upside potential, which shows close to a 12% upside in the share price over the next 12 months. Taking a look at how analysts are recommending the stock right now, is ranked a buy. You can see here 6 strong buys, 8 buys, and 4 holds. No one is selling out of Johnson & Johnson. It's too strong of a company right now, especially in the industry we're in, to actually sell out of this company. So you can see here overall a nice buy rating from analysts. And one thing I like to always take a look at is how they've been performing over their last quarterly reports. So you see here the last 6 quarterly reports, 5 positive surprises and only 1 is in line with expectations. So they actually beat their earnings per share and revenue surprises over the past couple quarterly reports. The last 6 quarterly reports are all positive surprises, so they've actually performed better than expected. And over the last 2, they actually saw double-digit surprises where they really outperformed what was expected of them from Wall Street. Another thing we want to take a look at is with companies, we want to see revenue growth. We like seeing revenue grow year over year, and even for Johnson & Johnson, their average annual expectation shows an increase in revenue over the next year. Even the low in the pessimistic and bear view for Johnson & Johnson still shows them growing revenue next year, which is very incredible to see. A different set of analysts show a price target around $164 in the next 12 months, which represents another 11% upside in the share price. If you take a look over the past 3 quarters, you can see here the price target has been somewhat sustainable, but actually going up each and every quarter. And all the buy ratings are still hold strong, 12 buys, 4 holds. So, and you see over the past 90 days, every single analyst has been recommending buy on average, just showing you that this is such a strong company. A bunch of different analysts are all recommending a buy right now. Even during the share price where some people may say it's overvalued, Morningstar says it's fair valued. A couple different analysts we saw all recommending a buy right now. And with this company, we're going to take a look at their financial statements, and just to show you that if you are to jump in right now, this company has such strong financial statements that it might not matter if they are slightly overvalued. Moving on, we can see here, what we like to see from companies is consistent revenue growth year over year. So you can see here over the past 3 to 4 years, they've done a beautiful job of growing total revenue. So 71.8 billion, 76, 81, up to 82. Over the past 12 months, they have a slight decline in total revenue, but of course we are going through an economic shutdown, and the fact that they saw only a slight decline is very encouraging. We saw other companies in a bunch of sectors post massive declines in revenue. So a slight decline is nothing too scary right now. Taking a look at net income, we want to see this company grow net income year over year. And you can see here a nice upward trend in net income. And they actually posted somewhat equal net income over the past 12 months. Even though the economic shutdown did occur, Very nice to see from Johnson & Johnson. So nothing too worried with regard to their income statement. Everything you want to see: growing revenue, strong operation margins, and continuing to grow that income year over year. Next financial statement we have to take a look at is the balance sheet. So a very important thing we like to take a look at is just total assets growing year over year. We want to take a look at their current ratio just to make sure they can handle all their short-term debt. Just look at their cash position right now. So you see here in the past 12 months, they're holding around $19.28 billion in cash, which is absolutely incredible. They have a lot of cash on hand to continue to innovate, grow, research and develop, and fund operations. Total current assets at $45.2 billion. Meanwhile, total current liabilities at 35.9. So they do have a current ratio above 1, which is great to see, just showing that they have enough total current assets on hand to deal with all their current liabilities and continue to operate the business. Total assets growing year over year. You can see 3-4 years ago, total assets of $140 billion, up to $157 billion right now, and total assets overall at $150 billion. Meanwhile, their total liabilities are only at $98 billion. So once again, a lot more total assets and total liabilities. This company has a strong balance sheet and will be able to continue operations over the long term. So Johnson & Johnson has been making the news a lot lately. We all know what they do. They operate within the healthcare sector and they own a bunch of different brands that distribute a bunch of different health products all around the world. This is an insanely massive company with a $390 billion market cap. They've been making the news a lot lately for their new, vaccine-related news, and they will continue to grow. And I do believe this company is a strong buy no matter what, only because this company is such a strong holding for a portfolio. They have that 57-year dividend growth streak, and I don't believe that dividend is going to be stopping anytime soon. They also have some nice share price appreciation. Over the past 5 years, the shares are up 47%. So I really think this company will do a nice addition to your portfolio if you are looking for a stable dividend king and you want that consistent dividend income coming in. And of course, with the news that they may be the one that come out with a vaccine, there might be a jump in share price moving forward. So always do your own research before investing. I can't recommend any company to you. You have to do your own research, speak to a qualified professional, and make the best investing decision for your personal portfolio. Thank you for tuning in. I'm the Gen Z Investor, and I will see you in tomorrow's video.